Alright, so um, today I'm going to be going over how you can read candlesticks and how it can help you determine where price is likely to go just by looking at the candlesticks. Yeah, it's a pretty good skill to have. This is what day traders use, is the candlesticks. Let me see if I can do this and show you guys what an actual candlestick is. Right, these are candlesticks. It's basically, instead of a line, it's using these boxes to show where price is going. I know it looks confusing, but hopefully me explaining this will make it a little less confusing. Let's see if I can. Alright, so within a candlestick, you have opening price and a closing price always. If the candlestick is overall bullish or green, right? Green indicates buyers are present, which means that price opened right here. Okay, so at one point, at the very start of this candle, when it just started, price opened right here. And throughout the time frame of this candle, it dropped down to here to form this low. Right, so this candle was all the way down here once, full red down here. But then also in that time frame before the candle closed, it pushed back up here, right? Pushed back up, formed this high, right? Price was also here at one point, and then eventually closed right here. So if I were to draw this out with a line chart, it would look a little something like this. You have price opens here, comes down to here at some point, then it goes up to here, and then closes here. Closes right there. That's what happened in this candle time frame within this candle. So sellers were in control, and then this wick shows us buyers started to buy and move price up, and then the buyers sold off their positions right here, and eventually price closed right here. So hopefully that made a little bit of sense. But yeah, if it's bullish, right? If the candle is strong, if the candle's green, the opening price is always going to be the bottom part of the candle right here, not the wick, but just the bottom part. So I have another example. I have another example right here with a red candle. Okay, so this time price opened here, right? This is the new candle, a new 5-minute candle. Price opened right here, and here I'll get my line tool out. Price opens here, goes up to here at one point, right? That's the high, and then continues all the way down to this low, but then closes right back in this area, right? So that's what happened within this candle time frame. It did go up here at one point. So at one point, this price opened here. At one point, let me see if I can do this. At one point, price opened here and went all the way up to here, and that's what the candle looked like. It looked just like that. But then it came down here, right? It passed through the opening point, which is this area right here. Turned red. If it goes below the opening price, turns red, right? Just like that. And then went down to here, but then back up and closed here. That's how you get that body. If price goes below opening price of the candle and closes there, it's going to be a red candlestick, if that makes any sense. And yeah, so now here's how you can use it to help you determine what's happening within price action. So as you can see, there's candles of all sorts of shapes and sizes, color, and all that. This candle has a strong wick right here to the downside, which shows me, this is what I'd be looking at, that you guys can draw this out too, just to make it a little easier. Right, price opened here, and it came all the way down. Price is all the way down here, but within this candle time frame, it was able to push back up and close above the opening price right there, right? So this is a strong indicator that buyers are in control and there's a lot of buying pressure. The reversal is right where the candle wick kind of ends right here. And so yeah, that shows right here. I have it written out. Sellers tried to push price down, but buyers were stronger and able to close price higher. This is showing that there's a lot of buying momentum in the markets, especially if this is on like a daily candle or something, a higher time frame candle. There's a lot of buying within the markets, and so you can help that, with your daily bias, and maybe take longs or something like that. And then we have this right here. This candle is just a great example of buyers in full control throughout the whole candlestick, because over here sellers were in control for a little, but buyers ultimately were able to close higher than the opening price. But right here, this is just a good example of buyers being in full control. As you can see, price opens right here, the candlestick open is right here. We go down to create this candlestick wick, and then up to here, and then we close here, right? So that's what happened within this candle. As you can see, all this, that is completely just up moves with very little downward momentum, showing that buyers are just in full control, able to bring price from here all the way up to here, close it with really no wicks. And yeah, that's another strong indicator of buyers being in control. It's the same with sellers, right? If this candlestick was, let me see, if this was full red, sellers would be in control, right? But that would mean that price opened here and they brought it all the way down here below opening price. That would mean sellers were in control. But that's not what that was. It was green, so buyers were in full control. Here, this is a candle with two massive wicks. Right here's the first one, second one here, right? And what this can tell you just by looking at it is, so price opens right here, as you can see, since it's the green candle. We come all the way down to this level, right? Buyers were able to come in control and push it back up to here, but then sellers brought it back down to here, right? So as you can see, the amount of movement between actual like opening price and closing price is not much, right? That's not much at all. So this kind of shows like indecision in the markets. Maybe it could go either way, if that makes sense, up or down. But it preferably wants to go up because it closed bullish still. And yeah, that's basically it. So now we're gonna look at real-time examples. Let me just delete all this stuff. Now we're gonna look at like real examples of where you can see this. All right, right here is perfect. So let me go to my bar replay. Oh boy, okay. Right here. So as you can see, we have a bearish candle, right? Price opened right here and closed below the opening price all the way down here to create this bearish candle, right? Price closed down, and we have very little wick to the upside and a kind of little wick to the downside, which this is showing that buyers are in full control, right? Opening price is right here. Price pushes up just a little, dumps down all the way down to here, and then comes back up just a little. But there's way more of a down move than any up moves throughout this candlestick. We can switch it to the line and you can see as well. Yeah, basically comes up right here, down. They don't really show that part, but that's why the candlesticks are so nice, because they actually show the pullbacks and stuff like that, whereas the line chart doesn't really do that. So what can you assume is coming after this? If you had a very strong bearish candle on the daily time frame, you could expect price to continue to move downwards. And as you can see, moves down, right? Just from that. Here's another great example. right here. So on the daily, even though this candle, this most recent candle right here, is bullish, like it's green. My greens are blues and my reds are white, but even though it closed green, you can still see that price opened here, came all the way up to here, and then pushed down. So really, even though it's a closed bullish, still can indicate that sellers are in control and maybe there is a potential reversal coming soon. And as you can see, if we play it out, yeah, reversal right after that, right? So let's keep looking. All right, yeah, here's another one right here. Just a strong closing bullish candle, and what happens after? Rips to the upside, right? Rallies up. Let me see here. All right, here's another good example right here. So we have this downtrend right here, and then we get this. Let me see if I can do this. Right? So we have this downtrend right here with these strong bearish closing candles, and then all of a sudden we get this daily candle with two pretty strong sided wicks, right? And it closes like this, okay? So that means price opened here, came up, down, and then closed right here. So not much movement overall, right? Very little, like movement throughout, but between the opening and closing price, very little movement, which this could indicate there's indecision within the markets, and it could flip potentially, it could not, but this could be an indicator that price, instead of following this downtrend, could move upwards and correct itself. So we'll just let this play out just like that, right? After the indecision candle, market rallies upwards, right? Let's see here. All right, right here's a good example. You can use candle patterns too. So let me go here. So we have this extremely strong bullish candle indicating price is going to continue upwards, right? But then the next day, we get this candle that pushes all the way up here, but sellers bring it back down to close right here where the closing price is, completely ignoring this other really strong bullish candle, which this can indicate a reversal because it just ignored all the buying pressure from the day before, and we were able to sell it off and just, yeah, ignore the buyers. And as you can see, just like that, then you get, and then just throughout this, you can just look, then you get a huge indecision candle right here, an indecision candle, but it prefers to go to the downside because it closed bearish, but still there's indecision. Sellers were able to bring price down, but buyers were able to bring price back up. And so you get indecision right here, and as you can see for the next couple of days, market's kind of flat, trying to figure out what to do. And then I'm sure if we just keep playing this, all right, right there, you get a full-on strong candle to the downside, right? Sellers were in control that day, so you can expect price to move further down. Indecision candle happens, and you get this inverted hammer, which is a great inverted hammers are a great buying indicator, but you get this inverted hammer and then this indecision, so now you can assume maybe price wants to go up. Just kind of stagnant, but I hope you guys can understand what I'm trying to talk about. Like, my eyes tweaking out. Inverted hammer right here. Whoops. All right. Right here, for example, on this candle right here, we have a extremely long wick formed on the downside, right? And this shows us that throughout the day of this candle, price opens here, pushes up to here, comes all the way down, right? So sellers are in control, but then buyers are able to bring it all the way back up and close just barely bearish. So this could indicate that price is going to continue moving upwards even though it's a bearish closing candle. As you can look right here, price comes all the way down here and then back up. This is why the candlesticks are better than the line chart, because the line chart doesn't show that type of stuff happening. Like you swept liquidity here, but the line chart doesn't show that. That's why the day traders use the candlesticks, because it shows where price did actually go throughout the day. So yeah, that's basically how you can use candlesticks to help you determine future price action. Hopefully that was a little bit helpful. If not, then that sucks. I'll try and do a better job. But yeah, you basically just use them to determine where price wants to go, and maybe it could be an extra confluence into your things. There's also multiple candlestick patterns. Not just one candlestick. For example, there's one called the 3 Black Crows, which is if you had 3 really strong candles like this in a row, it just indicates that there could be a strong downtrend. I don't really use those, but I know there's people that do use the 3 Black Crows. And yeah, that's basically just what candles are, how you can interpret them. If the candle closes bearish, the opening price was up top. If the candle closes bullish, the opening price was at the bottom and it rallied up and it was able to close above the opening price, making it bullish. But for the bearish example, price rallies, price dumps below opening price and closes below, which makes it bearish. Let me see if I can just go here on the 1 minute time frame. Markets are open. All right, yeah. So this is a perfect example. There's probably not much volatility right now, but as you can see on this little candle, price came down, up. Oh, see, price is moving down below the price opened right here and moved down, but there is this little wick and it's still happening. This is why you have to wait for a full candle closure, right? So now the next opening is going to be right where the previous candle closed or opened. So just like that, right? It opened. Price opening was right here, and it was able to push all the way down past price opening. But now buyers are coming into control, but sellers take back control and are ultimately bringing it down. But you need to wait for the full candle closure to see everything. There also is this fair value gap right here, so price could have a pretty big reaction out of here. Oh, I need to change this. Okay, yeah, so that's basically how you can read and interpret candlesticks. That's all I really have. We can wait for this to close. Boom. So as you can see, we just had a full bearish closing candle, and now the new opening price for the next candle is right where the other one left off. It's basically just kind of, once you look at the charts long enough, you'll understand it. Yeah, that's how you can understand and interpret candlesticks. Go watch my other videos if you haven't. Like and subscribe.